Hey traders, Raghee here. Welcome to Charts and Coffee for Monday. Great to see everybody. Hope everyone's doing well. Had a great weekend. We had an amazing class over the weekend, so thanks to all of you that were there for that Saturday on our ETF formula class. The cool thing is now we've got a week from today before the live trading starts. So basically what we have is that much time to review the class and also the materials, and then we'll dive into live trading for the first 2-week segment, and then we'll go into that additional 2 weeks for the total of 4. So really looking forward to that, working up some watch lists. And I want to start with your questions this morning. Good to see everybody. All right, let's do this. First question is NQ. And whether that be NQ or QQQ. Now, this actually reminds me, if you're on TradingView, and we used 2 platforms for the class. We used Thinkorswim and we used TradingView. You'll notice that I haven't yet, although I will by the time I jump into the futures room for the opening session. By then, what I will have done is log into my TradeStation account to fuel my TradingView with the live futures feed. Now, if you're trading ETFs, like from the class, or equities, you don't need to do that. They use the BATS feed, and you're fine as far as data to run your charts, to run the indicators that came free with the class. But since the question's on the NQ, just a quick reminder, we need to make sure we're using a live feed. And you see I've got the NQ up here right now. Hey there, Peter. Thanks for the question. So one of the things that I've been mentioning is we look like we're ready as far as where the markets have gone in certain indices for a potential stall. And I did cover this in Friday's free video. So if you haven't checked out Friday's free video yet, you can do so over at the Simpler Trading YouTube channel. And you'll notice we talked about the fact that we're still in chop. What markets do I want to be long in? Well, I'm long in them. KRE, XLF. We're looking at still USO, UNG. And then where do I expect there could be some fatigue within the context of the chop? And I believe Peter, ES and RTY were the 2 that I said, hey, look, these are at levels based on the previous Darvis signals or previous fatigue levels that it looks like the sellers could be waiting. Remember, whenever you're looking at a chart, of course, price is almost everything, but think of it as not price being wrong. Price only is simply incomplete. So we dive below price. We look at the patterns. We look at the volume. We look at the timing. We look at the volatility. There's so much that we can do to look below just this sort of one-dimensional price view. So, that's where I said, if you take a look at the video Friday, I said, hey, look, that ES is looking kind of fatigued, and RTY for sure. And so I don't not like NQ. It just didn't give me the signals, right? And if you took the class, the signals are everything. The signals are objectivity. The signals are where the time-tested, objective, unemotional setup and view is at. So thanks for the question. I appreciate that. Hey there, Tony. Good morning. Been watching the replay of Saturday's class. Awesome. Looking at ETFs in a whole new light. Great stuff. Tony, I would love to sit here and take some credit, but that was Trish. Trish put the class together. She's been watching my trading, helping me develop a clear way to, communicate what I do. Because I'll tell you this, conscious competence is really difficult. And that's where, it's helpful to have someone who can say, Rog, I've seen what you've been doing for almost, 10 years. Trisha's been with me. And so, she knows my trading, and then she knows also where you guys are inside out. And so, I'd love to take credit, but really I have to thank the support team and, Trisha especially for putting that class together. So love it, Tony. Love it. Is there a replay of the class? 1K pipes? Yes, of course. So if you If you purchase the class, the basic, of course, the pro or the elite, log into the Simpler Trading website, go to my classes, and you'll see that ETF formula class there. And of course, was it about ETFs? I think a lot of you now know, oh, wait, ETFs are a tool for lower cost options access, but they're also the way I'm going to build my watch list. So they're as much an asset class to trade as they are something we will use to understand what the other asset classes, equities, indices are doing. All right. What those other groups are doing. So awesome. Am I interested in setting up natural gas? Yeah, I've been getting that question in the mastery, and I'm glad you asked, Anthony. A lot of folks are wondering, are we getting back into UNG? And I did not on Friday because of the way in which, one of the things I didn't push was, really moving into natural gas in a very aggressive, or I should say in a large way. And so our last natural gas trade was on the 11th, I believe. Yeah, UNG. And we hit the first target. So this is a UNG conversation. So we hit the first target and then whoop, we pull back. So now what? You scale out of 50. So this is what I do. You scale out of 50%. You scale out of half the position. You move the remainder to break even, which I don't believe we've even hit the break even yet. So there could be a situation where the older trade is still not at break even, but it's half the size. Half the size means what? Half the exposure as well. And we could be open to a re-entry, which I absolutely am, because notice that the levels that we look at, so many of them are dynamic. Anything that's based on a moving average is not going to be a static level. It's rather going to be a dynamic level. And because this is more dynamic, the closer we get to about 1855 on UNG, and I really should look at natty gas as the primary determining factor. I'd say 519 to 509 is going to be the zone. That's when UNG starts looking really interesting. So yes, probably really close, if not maybe at some point today. But I just want to remind everybody, we're in it, managing it with a break even, which I don't believe is stopping us out yet. So we can continue to manage that trade in that space of unrealized profit loss, not loss to our account, not loss of our dollars, but an unrealized profit risk. I mean, we have to be willing, especially in the context of a trade and trend as strong as Natty, to be able to risk some unrealized profit after we paid ourselves. So yes, I am interested. Will I wait for an inside day? Anthony, I would love that. I would love an inside day or even a minor low. But in that area between 519 and 509 on NG, since you asked about the future specifically, I am open to it. And then the closer I get to the wave, call it 1855, 1854 on UNG, the top line of the wave, I am also interested. And then notice just below the top line of the wave, again, automate everything. We've got the top line of the wave. I would consider that somewhat aggressive. Then we've got the more conservative, well, I should say moderate entry. And then, look, I'm willing to buy all the way into the bottom line of the wave. So, I'd be willing to be a buyer clear down into 1775, 1780 on UNG. Okay, so thank you for that question. TM, listen to the recording of Saturday's class. Awesome, great material. Looking forward to live trading. I am really looking forward to it, TM, because what we'll be able to do is we're going to have 2 weeks together, not 2 sessions. I love the follow-up because I don't like just putting an alert out and going, okay, enjoy. Good luck to you. We'll be able to game plan the week each Monday because the live trading is one Monday after the next Monday after the next Monday. And so in those days in between, something triggers via the alerts, we can have that ongoing discussion. So I'm really looking forward to it. I love when we have these sort of prolonged windows of discussion between the actual live trading days or the live analysis days, because look, that's the way the market works. Is the market going to oblige us with all these perfect trades in the 2 hours that we're going to be together on Monday? Maybe, probably not. But we can set a lot up and then monitor it together through that time. So I'm looking really forward to it. I appreciate that. Thanks for the feedback, everybody. All right. XLI. Oh, if there's a problem child, it's been in my book, Tim. Yeah, it's been XLI. Now I ditched the moderate because I had to. We hit the uh, we hit the paper cut. One of the things that was so great, I think a lot of you saw in the webinar and in the class, is the ETFs. They're less expensive, right? I mean, you think of the cost of XLI in terms of the option, it's less expensive, right? And so because of that, I think I'm going to sneeze. Oh, hang on. Oh, I love the mute button. No need to deafen everybody. Whew, all right. All right. So anyway, looking at, what was I saying before I sneezed? Okay. So looking at XLI, cost low, risk low, scalability high, out of the moderate. I'm out of the moderate. I had to take my paper cut, but the conservative was able to hang in there. So my thoughts on this, very clearly. If you're looking at this for the first time, there's better places in the market to look for opportunity. UNG maybe being one of them. Maybe some of the fades that I mentioned on Friday when I said, hey, look, these are setting up for fatigue levels. Those might be better as well. Maybe you're just going to day trade today, right? Because you're waiting for some clarity to reveal itself. In the meanwhile, we'll shorten the time frame and we'll look at a smaller window of opportunity. But I would not re-enter XLI. It's no longer doing what I want it to do. And so I will manage what I have because that's my job as a trader, but I will also remove it off the watch list because that's also my job as a trader. And then my ETF formula folks, hey, if we're going to look into XLI, we're probably going to end up at the stock level looking for clarity there. So I don't believe that it made sense on Thursday, Friday, to start to think about the markets bullishly. I think that's yet to be seen. So be careful on that one. All right. Let's see. Next question. Hey there, Dan. Based on the class, is Honeywell a good example of an outperforming stock in the DIA? Honeywell was actually one of the markets I wanted to look at for potential shorts. So if you're talking about relative outperformance to the downside, I'm absolutely with you. Remember, structure before strategy. Structure, a little bit of neutral coming in, but this is still a market that I would, by and large, consider a fade short. Fade short. So if you're talking to the downside, yeah. So would it be a good place to put on a conservative, again, buyer, yeah, for the downside? So you mean putting on a put, quite literally. Yeah, I think we could use, see that 55 right in there? I think we could use the 55, Dan. Yeah, great question. You got it. So I think relative outperformance, we always think to the upside, but sometimes it can be relative outperformance to the downside. And I'm with you there, Dan. Really, really good analysis. And this is a symbol that we've had on our radar. I think I did a video on that one maybe about a week ago. If you want to check that out at the Simpler Trading YouTube channel. All right, next up is TLT. And what's really cool, based on the class, Dan, so what's really cool, again, if you're pro, it's 2 weeks. If you're elite, it's 4 weeks. So between October 25 to November 19, that room will remain open. And again, each Monday, we're going to have our, kind of our session, our strategy game plan session. But then, the room will be open for the full 4 weeks on that elite. So if there's something that's going to happen with some of these downtrends, I'm game. We're definitely going to talk about it. And that includes TLT. So looking at TLT takes us over to ZB. And ZB, sorry, on Trade Stations US. I want to take advantage of the exhaustion. I want to take advantage of the move lower. That then, from a choose your own perspective, choose your own adventure, is our TLT short. Now we already have our TLT short open. So if you take a look, we've got our December 17 TLT puts open from $4.50. So we already have that trade open from 145.45. So now as we are heading lower, I know we're only sitting at pre 144.76. I really like it to, take a look at the US. It's moving lower. I think we're in good shape on that one. I'm not going to enter it here because, specifically the window for the entry was more October 13 and 14. And from the class, or from the master, or anytime that I'm in any of the rooms, the specificity of the window and the MOMO, window and MOMO. What's that price window that we want to see the action in, and what's the specific action we're looking for? What's the MOMO? And when you capitalize on that, the blue light specials become very realistic. They become very actionable, and they make perfect sense. How do I reduce the cost? You wait for an environment on the chart that is going to give us a blue light special, that is on sale. That's what I mean. So yeah, nothing to do. Roland, thank you for the question on TLT, for sure. But not today. We're already in it, but great eye. That's the kind of market that I want to be short. So Jimmy, I appreciate that. Thank you very much. Thank you very much. So let's see. Chris asked, good morning. What are my thoughts on long TLT? I'm sure someone else might have a long TLT play, Chris, but I do not. And the reason for that has to do with structure before strategy. So that structure carries up to a short in that area. Frankly, as we head lower, there might be a chance where, at some support level, maybe around 144, we bounce, and that could be a good opportunity. But ultimately, what I want to remember is that if I was double red, the only thing I can do is the puts, my friends. So there might be other setups to be had. Of course, there probably are. Sure, different time frames. But for my tools and this end of day daily time frame, which is the focus of the class, right? We've done day trading classes. I've shown you how to trade short term. But what about trades that we want to see take us for days to weeks? What's the right interval? What's the right duration? And that's really what that class was all about. And for me, daily time frame, and I'm looking for days to weeks to the downside. And that's what the structure is telling me at the moment. So I hope that makes sense. Alex, good morning. Am I going to play both directions? Oh, I don't know, Alex. We'll see what happens. The determination to be open to long and shorts has a lot to do with the market structure and where we are in terms of the action within the VWAPs. So I'll be taking a look at that this morning, and we'll do that in the futures room. And then if you're in the mastery, heads up for the notes, but I'll see what gets hit first. I'll see whether or not we get a good fade on the lower end of the range for a buy, whether we want to fade the upper end of the range for a short, but I don't know that I know that quite yet. I want to see how the morning sort of shapes up, Alex. Yeah. But again, the easier way to determine, are we even open to that, is our price action sandwich between our anchored VWAPs. All right. So by the way, there's still time to join me for live trading. If you haven't thought about it yet, think about either 2 full weeks with me or 4 full weeks. We're not just doing sessions. We're doing the week in terms of we'll be together on the mic Monday, and then you'll be getting my alerts throughout the week, getting together again on a Monday, and then alerts throughout the week. So With that being said, I will see you all. Thank you. Thank you for the Gesund Heights. Thank you. I'll see you all tomorrow, same time, same station. My folks in the Futures Room, stick around. We're going to start our opening session in just a moment. Folks in the Mastery, heads up for the notes. And everybody else, have a great trading day. Make sure you're checking out that economic calendar, and I will talk with you soon. Be good to each other.